Hey guys, this Doug the Retirement Guy here. This video is going to be brought to you by our great Patreon supporters. Without you guys, this channel would not exist. And we really want to say thank you to each and every one of you, especially all the new ones that we've added this week alone. So we want to thank you for your support and get into today's video. We have the weekly pay dividend ETFs. We are up to 37 funds that we have actually purchased and bought into. And we want to show you how we're doing, the updates onto it, and then we're going to revamp this whole thing after this period to come up with a totally new style video. Probably be able to spend a little more time on each one of the funds. So stay tuned for that. And if you're not a subscriber, we would welcome you to the channel. Hit that button, subscribe to the channel, and you're going to learn a lot about these weekly pays because they are changing every week. So let's go forward and show you what happened this week in the weekly funds. First, we have to say to everyone, past performance does not guarantee future results. The information provided in this video is for educational, informational purposes only. It should not be considered financial or investment advice. The examples and suggestions discussed are illustrative and may not be suitable for your individual situation. Always consult a licensed financial advisor for a professional before making any financial decisions. The first fund we're going to get into is the Nicholas Block, BLOX. This is their crypto income fund. We've only had this now for basically 2 weeks, but already I'm very excited, very proud of this one here. Blocks has done very well. It's up this week again. We see a 20% return already on our investment. We bought at $19.48, and we're already up to $23.42, which is almost a $202 gain. The dividend pays off fairly, it pays okay, 15 cents per share per week. We would love to see that a little bit higher compared to others, but overall, the package together is very nice. As we look at the bottom, and this one here, as you can see, our stock value is $1,200. We've collected $14.93 over 2 weeks. So we have a 21% total growth. So Block is definitely one of those that we would highly recommend taking a serious look at. It's possibly one that you would like to add to your portfolio and get you into that crypto package. But we see a lot from the cryptos that they are doing decent in the returns, but we do find some that have a little higher dividend. So it depends on what you're looking for. Let's get into the next one, Rex. Now this fund, I'll be honest with you guys, I'm so impressed with Rex. We've only had it for 5 weeks, but we've been studying them hard for 5 weeks. We've done separate videos just on Rex of what they're doing. I love their strategy of 50-50. 50% goes to growth, 50% goes to income. And we're seeing it showing up in a lot of their funds. So when we take a look at this one right now, their coin fund, COII, is up 40%, up 8% over last week alone. So this thing's huge. This thing's climbing fast and doing well. We did a comparison with them against the other coin ones, and they held up very, very well in that video. And if you want, I can link that video down in the description below. You guys can see this one. But basically, we're up 40% already on that fund alone. So they are definitely giving us what we're asking for. 3 out of the 4 funds that they offer were all up this week. You can see their NVIDIA is doing very well as well, 25.29%. The MST portion is 7.75, and Tesla is the only one that they're struggling with. But everyone's struggling with Tesla. Everyone is having problems trying to figure out where that fund's going to go, because the Tesla has the volatility just bouncing around. So it's probably good for dividends, but it's not good for the fund growth itself, because it's up one day, down big another day. It's all like news cycles, what happens. So the fund so far in only 5 weeks, we're up 17.59%, even with the Tesla being down. So guys, I am very, very pleased with Rex as we move forward. Rex dividends. Now we take a look. Coin again is paying out 34 cents this week. Just that's a great comparison to what we just had with blocks. You may have great upswing, but these guys are paying 34 cents a share versus their 15, so it's almost double. So this is why I say it's excellent to be in the block, but Rex is probably going to beat on this point. The other one to look at is that Tesla one. They're up 8.31%. They're paying a nice steady dividend in and out each week. So very strong dividends. It is down this week for the weekly pay. We're down to $37.83. And I tell you, we're not down that much. We're under $1 basically down from last week. In 5 weeks, we've gained $317, basically paying a 0.95% per week, which is, right around that 52% dividend package. So you can't beat 52% off of this one. When we look at everything combined total, take a look at what we got. And here's the exciting part to it. First off, coin is up to 49.41% when you add in the stock value plus the dividends. So they've done very well there. But I put the yellow one on the Tesla package. When you calculate in your dividends, when you calculate your stock value, you're actually positive by 5%. So there is no real loss when you calculate in your dividends into it. But if you're trying to live off of dividends like myself, you're not going to be tying that back into it. So you will have a value loss. But overall in the investment, I think right now, the Tesla stocks are probably where we want to put some of our money and start rolling some money into it. And I got one a little bit later, I think is really heavily into it. But overall doing very well. Stock return, like I said, at 19.71% or $703. Our dividends, $317 or 5.98%. So the total fund over 5 weeks basically is $1,000 or 25%, which basically you do that math and you're looking at 5% per week total return. So very, very impressive across the board from Rex. If you haven't looked into it, check out the video. You'll see Rex does a phenomenal job with their funds. GraniteShares. This is week number 6 for GraniteShares. And quite frankly, again, I got to give good with the bad. And again, 2 weeks in a row, I'm not real excited about GraniteShares. Their YSPY is up 3.36. Their Tesla is down 17.54%. Now, the nice thing is it is up over last week. And this is actually a fund that I would say, hey guys, even though I am down on it, I'm negative about this, but I always kind of look at the packages. Is TSYY is so low right now at that $9 price point. I wouldn't be afraid. This is the one I would buy if I'm going to buy any Tesla. I'd be buying this one right here because I believe it's got so much up space and so much up room to go, and it's starting to find its legs and move forward. I'd put the bet on this horse. I think this is the one that you're going to want to be in part of, if any of these, for Tesla. Overall, like I said, the GraniteShares does not show a lot of growth in their funds. We are actually down 2.09%. It's up over last week, but I mean, we're talking maybe 1/10 of a point. Very, very little. But Tesla, I just keep coming back to is Tesla has the legs to get back to. I think you could probably get a 10% swing, to be honest with you, in the stock value. And then when we look at the dividends, you will see Tesla pays out 24 cents per share. So a little less than what the Rex did, more than what Block is doing. But overall, I think the 24 cents could make a huge difference in a $9 stock. So easily you could be making some additional income from this one. And it is their number one stock that's paying dividends. Now, their NVIDIA fund paying 51 cents is doing very strong, still a great dividend side. And that's one thing I look at from GraniteShares is their dividends are very good, but their growth is horrible. So it's kind of like which side of the fence you want to be on. And I'd like to be right in that middle, like RexShares does, or what we see from the other big brands of Roundhill and YieldMax. So we are up this week, $77.90. We've gained $591.86. We're up 1.56% for the week and 81% total dividend. So you can see the big difference there. They're paying 1.56 for a week. So it gets you easily into the 81% dividend side of it. But you have to remember you're going to have to deduct for the value of the loss. And we show that right here. When you take a look at it, NVIDIA overall is their number one fund. Okay, at 16.67%. You have some small growth in the stock fund. You have some big growth in the dividends, giving you that 16%. When you look at the Tesla side of it, as I was just bragging about Tesla, you're only 0.85 away from break even at the price that we bought, which was over $11. That's why I'm saying I think if Tesla you bought now, and if you did this, your stock value would be probably increasing into it. Add in the $166 in dividend, which is the largest dividend payout so far from any one of their funds. It's a money cash cow that's going to happen here. And that train's going to be leaving that station, I believe, probably next month. So really keep an eye on TSYY. The rest of the funds, when you calculate in the stock value versus the dividends, as I said, GraniteShares pays great dividends. But overall, the stock return is down 2.09, but they're up 11% on the dividends for a total fund up 9.75%. So I think you can see how I compare the two. GraniteShares great dividends, poor on the execution of growth. The Defiance, we've had Defiance now for 12 weeks. And back to the number one spot is QQQY. Between them and MST, you're fighting back and forth between those two, having a 8% growth so far since we bought the fund. Everything is right in line. QQY, has one bad week. MST is right there, back and forth. IWMY was right in the running with all of this as well. It's taken a little bit of downturn lately, almost to one of those positions that you could pick up some shares there as well. IWMY is getting back down to where the price we bought it. We're only within 30 cents of each other. So it's one of those funds that, you may get some value out of it. But our total fund right now is up 3.83%. We look at the dividends, and here's why I tell you guys this. IWMY is our leader in dividend income. So if we're getting back to that basic starting point that we had, you're going to have either flat growth or increase in growth. Okay. And you're going to get paid heavily on the dividend. So it's a win-win situation. Again, this is why when you watch things over 12, 15, 20 weeks, you start seeing trends, you start seeing things coming alive. And that's why I start seeing these things of IWMY is another one that would be on my radar and saying, hey, this may be something we want to investigate. We want to watch that price and maybe buy the next dip or start adding to our portfolio a little bit each week as that stock gets back and settles itself back down. So overall, the fund, this one in dividends, paid $61.27. Well, we're up again this week with them. We're up to $474.59 total gain so far. That's 1.23% per week for a 63.72% yearly dividend estimation. So here's the thing: if you're putting your money into all of these funds, or you can do select funds. It doesn't quite matter on this one, but basically you're getting 1% or 1.23% of your money back each and every week. That's what makes these weeklies so exciting, that we're collecting that 1% because they're paying nice, strong dividends across the board, and they recover so quickly. So when we look at it, IWMY again is at 12% return over 12 weeks. So that's about 1% per week. That's why we love that one and balance that one. And MST is at the 10.93%. When we put all of that together, all the information together, you can look at is QQQY is still knocking it out of the park at 17.59% with the gain in the stock value and the gain in the dividends doing well. The next one, MST, which is it's fighting against QQY and in their funds, they're at 15.95%. But look at IWMY. Uh, and I'm not trying to promote and push any one particular fund, but I just tell you guys, when I start seeing something that makes me excited, that's saying, hey, this is an opportunity, I want you to see it because I want your pocketbooks to get bigger. I want you to benefit from our knowledge. And IWMY, 13.55%. We're getting back to that beginning number again. So there's no reason why you couldn't be into this game and still late 12 weeks into it, still get back into the train and get on board and let it roll. So Defiance is up 3.83% in stock return, 9.49% in the dividends, and for a total return of 13.32%. It's probably a great comparison to what we just showed you with the last sets from GraniteShares, and then showing it with Rex. You can see why Rex is really exciting for me. Defiance, I'm very pleased with Defiance. Very pleased with what they've done so far. Now let's get into the 12-week report from Roundhill. I know most of you, or a lot of you out there, have watched this one, and you got money tied up into these things. So we take a look at it and look at the board. Everything is up except two funds, and one of them I really don't even think we need to track anymore because it's going nowhere, and that's going to be the weak fund, WEEK. That one's down. That one's up a penny, down a penny. It's a penny movement every week with that fund. So that's why I said we don't really even need to talk about that fund anymore. But the RDTE is down, lost about 1 percentage point from the previous week, but now getting back to positives. I'm sorry, the Apple program was down this week as well, lost about 2 percentage points there. That one's been running down since we started this program. It's not one that's exciting to me. I believed Apple should have done better. They should do a lot better with this. But you got to remember, these funds work from volatility. Volatility generates dividends. Volatility allows them to buy funds at different prices and so on and try to get growth off of it. So you got to understand how these weeklies with the selling of call options and so on, that if there's not the volatility in the fund, you're not going to see the dividends. If you don't have the volatility, you're not going to see, you'll start to see some gain in the funds. You'll start to see things happening. But that's one thing with Apple we're not seeing completely. Look at the coin, though. We all know coins had a lot of volatility, and this one's now up to 91.56%. And when I say coin, it's COIW is what we're looking at, the one in the green. Up from last week. I mean, that's like a 15% gain over last week alone. And this thing's over $64.52, and we bought it at $33.68. So that one there is my warning sign with that one is it's growing. And if I could know that thing was going to have a 15% growth this week, we would put more money into it. But I just gotta believe it's got to slow down somewhere. And I'd be watching that one again for a dip. And get involved in that one on the dip side of it. But Roundhill is just really across the board. I don't know if you can actually say there's a bad fund in there. You look at their Tesla one. Their Tesla one's actually up. This week they were able to gain a great percentage point on theirs. They were down 5.67 last week, and they're up 0.28% this week. So that's nearly a 5% switch right there. Across the board. So their Tesla did very well in stock value. We'll see what it does in dividends here. But the nice thing about it, coin is up to that 91.56. The growth of the fund is 15.02% so far growth. I just think Roundhill's doing it right. They're getting their ducks in the row. They've gotten things working. They don't have any one particular fund other than that COIW that's blowing it out of the water. Everything is really tracking equally. Their NVIDIA program is doing very well. So with the great stock return or fund return that we're getting, let's take a look at the dividends. And right off the bat, you can see OIW did 79 cents. It's paying out 19.42% dividend. So you got a win on both sides. You got a win in dividends. You got a win in stock return, in the fund return. So very strong pieces there. The next second one is going to be the Tesla package. They're paying 38 cents. in dividends. So again, you go across the board, you're seeing this from a 15-cent at block, you're seeing it 34 cents, now you're up to 38 cents. So doing very well in that fund. But I wanted to note, as I always do, is I knock people down. I knock things to put the negative to it. I've said Apple was terrible, blah, blah, blah. Look what they did this week. They posted a 75-cent dividend this week. The second highest only to COIW, is the highest that they've posted in a while. So it's one of these things that will throw the numbers off a little bit in their value. But if you did own it, boy, you're looking and smiling because you got a nice paycheck this week. So the fund is up 7.88% in dividends. That was a huge help to it. But across the board, in 12 weeks, we've gained almost 9 percentage points from dividends alone. We've gained over $1,000 from this fund. This week, it's up $121.13. It's up over last week, the weekly payout. It's back up to the 1.01%, which gets us back to that 52 percentage point return. So we're very pleased right now with the dividends that's come out of Roundhill on a steady basis. And I really don't think that really you could really pick and choose who you want here and probably do very, very well across the board with Roundhill. When we do this combined, 12 weeks into the combined, take a look what we get. Apple only down 0.44. That's the only one that they have that is actually still down in the whole package. Everything is up. Even if we talk Magwai being slower, they're still up 10.52%. So they're still got stock. The fund value has gone up. The dividends paid extremely well, so they have a good return there. If you're looking for dividends, again, the Coinbase Pro products is always paying out well. Tesla is paying out well, and Nvidia is paying well. And I don't want to leave Pelter out, but PLTW is doing well at the 135, 32% total gain. So some very strong pieces there. So for us, we've had a 15.29% gain in the stock return. The dividends paid 9.48, and the fund has totally come back with 24.77% in 12 weeks. So again, Roundhill, guys, if you're looking to get into weeklies, I would highly suggest you evaluate each and every one of the Roundhill weeklies. They're just paying great dividends, and they have some upswing along with it. So without breaking down each and every one of them, Roundhill, take a serious look at each one of them. YieldMax is out there. I know everyone watches YieldMax, and I know the one fund that they're all going to be talking about. But GPTY is still busting loose. It is still doing great, 21.59% gain. If you look at their funds, only 3 of their funds are down this week. So they win the top fund for the week at 21.59%. The total package is growing at 8.45. So not as powerful, not much as growth as you see in Roundhill. That's why we always say Roundhill we believe is our number one choice. But YieldMax 8.45, it's impressive. They're doing fairly well. I think we have, in our book, we have Roundhill is 1, YieldMax is 2, and Rex is 3 for powerful ETF funds with these weeklies. Now, I know everyone's just sitting on their edge of their seats waiting for us to talk about it, so we'll say it. ULTY is rocketing, not, I'm going to say for off the bat, not just dividend, but they are rocketing value return of your fund. This thing was always bounced around that $6.20 point. It's now moved to the 640 category. This, for us, it's up 8.83% and climbing. It's doing extremely well job. I still think it's time that you can still get involved in that fund. I don't think that fund is ready to drop off yet. But again, you always buy in sparingly. And the second one is YieldMax. Now, YieldMax, I have an opinion on both sides, and I'll hold my opinion until the next screen. But YieldMax had a slight 11-cent gain this week. They've been basically adding about 10 cents per week in growth. So we're really pleased with what we're starting to see from them, having a little bit of gain, and we're up 1.45%. So YieldMax is giving you some growth and moving forward. Now, continuing on with that conversation, it's in yellow. YieldMax, even though here we are producing great dividends at 10.85% in 12 weeks, I want everyone to note YieldMax took its biggest drop in dividends this week. Because I'm heavily invested in YieldMax, I watch that one probably closer than anybody else. And that one there, we dropped almost 3 cents per share this week alone, which was down from the previous week of 2 cents. So over past 2 weeks, we've dropped almost 5 cents, or a third of our dividend has dropped in YieldMax. Now I know the comments will go crazy out there. The truth is the truth. YieldMax has lost some prestige in its dividend. I hope it comes back. I hope they get the market back with, picking up a little more dividend across the board, which is why we bought that fund. We are getting some growth, which is a positive. If we have to get out of it, we're going to be able to get out and get into other things. But just noting that. On the reverse cycle, ULTY had its biggest dividend. It's been paying basically 0.95 cents. I'm sorry, 9.5 cents per week. And last week it went to 9.6. And this week it's over 10 cents. So ULTY is gaining its value and still increasing its dividend. So those are our two highlights in the YieldMax package right now, and they are realistically our number one and number two dividend payers, ULTY and YieldMax. So, still the biggest one, $199 in 12 weeks, very, very strong numbers, 108 on YieldMax, doing very well there. So we are actually up this week, $78.33 is what we collected. We're up about $1 something over last week. We've collected $945 so far, 0.875 or a 45% year dividend total. So we're not at that 1% return yet. So that's why I say the YieldMax doesn't pay as big a dividends as Roundhill has been paying. They do have two funds that are doing very, very well. And I can't down anyone else, because you take a look at the LFGY, you take the chip CHPY, from the semiconductor one, they're paying some nice big dividends. And they're paying consistent, but it just we're just not getting the returns as we've done with the ULTY and YieldMax. Still are big pieces to it. When we take a look at the total gains again, I got a couple of highlights ones there just to show you guys is realistically, GPTY is still the number one fund. It has the largest fund growth at basically $215 worth of fund growth. So they got great growth there, plus a solid dividend for them having a $306 total value return on that fund, or 30.69%. That is the number one fund. But when we take and look at that, and I'm not trying to take away excitement from that fund. If you're into it, I am proud and I'm happy that you're into that. It's a great fund. But most of the people we talk to are into the ULTY. They're watching it fairly regularly. They're worried, what's going to happen? Will it continue? Will it be our cash cow? Can we run the whole year with it? And what we show you here is the stock value is up 8%. The dividend is $199 in 12 weeks, doing well. Total value is up 28.79%. I love that fund across the board. Once I understood it, got into it, especially the big thing is the return on capital that they're doing. If you don't know about that one, ULTY does a return on capital, which helps save you money in taxes. So some people at the report, I probably did the same thing in one of our videos, said, hey, look out for the return on capital, but it's really a tax program that they're using, and they're starting to do it in YieldMax as well. And I know, well, YieldMax, because it's the most popular fund that's out there right now, is that, guys, we're at 12.30 return on ours. We have a little bit of stock value, but we really have a nice dividend return. When we look at our total return right now, we're at 8.45%. 10.5% in dividends for a total fund of 17.05. So again, YieldMax comes in at second place for us. In the 12 weeks, guys, we have come up with the stock value. We are up 3.8% total in 12 weeks. We're collecting $384 a week, or 1%, for a 53.9% total dividend. So again, the reason why we did this, to show you guys the weeklies are profitable. The weeklies are where you want to be. You don't buy early, you buy when you're educated, you buy when it's hot, and I hope this information can help you down the road. Let me give you some Doug picks. We're slowly getting back to being able to give you guys the buying points, the buying areas that we want to be in. But the first fund I tell you is ULTY. I would be buying the dip. And that thing's at a 641, 642. I'd watch. I think that thing you'll see this week that get down to the 630 point. Love to see it down to 620. I would buy on that dip. I would buy something in that mid 630s. And just go along with it. You're getting good return across the board. You're getting good dividends. Very pleased with that. Now, this one here is COIW. This one just blows me away. This thing is just, the 1 week I talk about it, it goes way up. Once I tell everybody to buy it, it's going to go way down. It's kind of like the way I play things. But I would highly keep an eye on that one. A 15% gain this week alone is right on Doug's picks of keep an eye on that one. If you get a dip in that one, wouldn't be afraid to say it. Now, this one's going to be the next one will be the comment, and people will argue left and right on this one. But I'm going to tell you, I believe the buy of the week is going to be TSYY. I would highly suggest you buy at 960 and below, which is not far from where it's at right now. I believe this fund, you're going to see this fund probably in the next 7 days. We're going to be talking that this fund's going to be in the $10 range. The big positive to it is you've got dividends to help cover you right now. So why I say it's a time to buy it is you have big dividends to cover you in case there's any more drops to it. And if it does drop, your cost averaging is going to be a lot easier to maintain because the dividend will stay where it's at. And the more that Elon Musk talks on TV, talks in the press, gets on Twitter, and so on, it's going to keep the volatility of that stock going, which is going to create heavy, heavy dividend payments. Finally, the best dividend stock of the week, I hands down, I still put it this way. It's all because of dollars versus investment versus return across the board. I give it to ULTY again. Now, I said this thing paid 0.96 cents. It's 10 cents this week. Will it stay that way? I don't know. So I'm keeping it at the 9.6 cents that you can count on getting. And it's just it's ULTY. It was last week's pick. It's still this week's pick, but I'm telling you now to buy it with a dip. Guys, it's Doug the Retirement Guy. If you like what we're doing, give us that thumbs up. If you're not part of the club, hit that subscribe. And guys, go ahead and leave your comments. I'd love to hear them.